You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers. And in today's show, you're going to be hearing from Rob Stevens. He is a trainer and he's an author of my favorite and the book for learning how to understand the mining sector and the basic geological ideas and principles for interpreting exploration company drill hole results. This book was recommended to me many years ago when I was in the PDA bookstore, PDAC bookstore, that big mining conference. And this has been a book that I pull out on a monthly basis. Literally, I'll be reading through a press release and I don't know what I'm reading because I've never had any formal training in geology. And I go back to this book, look at the glossary, read, go to the topic and chapters and go read about what this press release is talking about. So I do recommend that. There'll be a link to that in the show notes. Also, Rob is offering my listeners a discount on some of his upcoming courses. So we'll be talking about that at the end of this interview. But Rob, welcome back onto the show. I think it's been about 18 months or so since you were on the show. And could you walk us through, this will be a little less of an interview, if you could do a presentation and kind of walk us through how to interpret, in a basic sense, exploration company drill results.
Sure. Yeah. Great. Thanks, Bill. It's my pleasure to join you again, and thanks for the opportunity to chat with your listeners and with the pump for my book. That's always nice. I really wrote that for people who are interested in the sector as investors or working in the sector. And there is so much terminology, as you said. It can be tricky, and talking about news releases, I often, when I'm looking at them, I see all sorts of geological terms in there. Which I'm sure for many investors are just, goes right over them. And some of them are really important, not all of them though. So some of them are there maybe to impress the other geologists that are around. I don't know. But news releases of drill results. So let's talk about that a little bit. I think for exploration plays and for junior companies, the release of results from drilling is really the most important, first step that they are taking in terms of advancing that project. There can be lots of work that's done before that, mapping, soil sampling, those kinds of things that are really important to the geologist and help them define those drill targets. But I think from an investor point of view, it's really the results from drilling that are the most meaningful and that give you a sense of whether that company has actually found something. So I want to just step through a couple of things that I would recommend for investors if they come across a news release of drilling. So how do I dig into that? How do I understand what it is that company is actually presenting in that news release? So the first thing that I always like to say is to say, okay, well, what was the reason for the drilling in the first place? And to sort of categorize the drill results in terms of why they drilled. And I really break that down into three different reasons for drilling. What I call discovery drilling, expansion drilling, and then infill drilling. So discovery drilling is kind of as it sounds. That's usually the first few holes into a new project, or maybe the extension of an existing project that really are aimed to see, do we have something in the ground here? Do we have a potential gold deposit or copper deposit? And that can be one of the most exciting set of drill results that come out from a company. They've probably done lots of work to define those drill targets. Now they've drilled it, and if they get some good results, it can be big for the market. It can certainly move that market up. It can propel that company forward to the next stage. Of course, results aren't always good. So I would say one thing with the discovery phase is often the market hasn't moved very much. People are waiting for those initial drill results. If you see them and they're good, it's time to get in. If they're not so good, the company may not fall back all that much because often they haven't moved yet because people are waiting for those drill results. So that's the first one. The next one is expansion. So after a company has made a discovery, which might be, say, half a dozen or 10 holes or even a few more initially, now they're going to try to see how big is this thing. So if that's what they're releasing, that's kind of the next phase and can also be really exciting from a market point of view. They're drilling out along strike, down dip, or at depth to see how big it is. Again, I've seen in many cases where there's a series over several months of these releases that come out for expansion, and you can see a lot of increase in the market from that as well. The one maybe caveat I would put on that one is that you do see for really interesting projects that the market almost gets ahead of some of those releases. So, you have a discovery news release, then maybe you have 3 or 4 or even less showing expansion that are very promising. The market can move up pretty high at that point. And I've seen cases where companies continue to expand their deposit with good results, and you don't see much movement on the market because it's already been built in. So that's something for an investor to keep their eye on is if there isn't much reaction to those results, the anticipation of good results is already built in. And of course, there's that downside. If suddenly the expansion stops, the deposit closes off, that can have a drop down on the market. And then the last reason for drilling is what I call infill drilling. So that's more of what I would say is technical drilling. Once you've discovered it and expand it, now you need to understand that deposit. If you're going to ultimately do a resource estimate, a grade and tonnage estimate, you really need to understand it. So that means you now need to tighten up your drill hole spacing, and you need to drill a whole bunch of holes really in between those that you've already drilled. So technically really important, but in a way what it's doing is confirming what we already know. I mean, for the geologist, they need that information, but for the investor, it's not necessarily making it bigger or better or anything like that. And so you don't see a lot of movement on the market often with the release of infill drilling. That's not always the case, of course. So that's the first thing I would do. What is the reason for drilling? And then to think about it in that context. So that would be the first one I would say. The next one is then, okay, so looking at the actual results themselves, the next thing is what are the drill intervals or the length and the grade of the significant results that have come out. So that can vary all over the map from little tiny, half-meter intersections to some that are hundreds of meters long. And so it can be a bit sort of confusing how to interpret that. So what I always like to tell people is to sort of step back and think about, well, what is that deposit that they're drilling into? What is its shape and its size in particular? If you can get a bit of a vision or view in your mind of what it is they're exploring for, then you should have a sense of, well, how long should these drill intersections be and what is the grade? And you mentioned one of my courses. One of the things that I really like to emphasize in the course is showing a lot of models and visualization so people can start to get a better idea of what these bodies of mineralized rock with gold or copper in it actually look like. And you can define end members. Maybe the first one I would say is narrow high grade. That's very common in gold. So you don't need hundreds of meters of drill intersection. You might only need 3, 4, 5 meters, maybe a little bit more. If you've got good grades, several grams per ton or more, that's a meaningful intersection. And so you get these sort of narrow vein or high grade type deposits. The kind of other end of the spectrum is something like a porphyry copper deposit, which tends to be large, big tonnage, and low grade. If you only had a few meter intersection in a porphyry copper, that wouldn't really be meaningful at all. What you're looking for is tens, really hundreds of meters of intersection, but very low grades. I mean, you might have 1/3% copper and 0.5 gram per ton gold or something like that. But if it's a big intersection, then that's meaningful as well. So I think you always need to look at those sort of length of the intersection and the grade. That really helps people to put that into some sort of category. Now, if you want to go further than that, and then this is getting more geological and more technical, is really understanding the type of deposit that they are drilling into. And I think there's a lot of value in that. But if you don't know that geology so well, I think you can still understand it and assess it just by thinking of the sort of shape of the deposit they're targeting. Is it a high grade thing? Is it a low grade thing? You can start to assess that without knowing really details of the deposit types. Helpful as that is, I don't want to discourage people from learning a little bit about different deposit types. One thing I would also say, just from a kind of a learning point of view, are maps and sections. So some people are really familiar at looking at maps and sections, and they can get a lot of information out of that really quickly. I always remember the phrase, and I'm probably going to get it wrong here, but a picture is worth 1,000 words or something like that, or maybe it's 1,000,000, I don't know. I always go to the maps and sections, and they can really help you to see where the drilling is, to see, what they intersected at depth. They often also show you the drilling that's already been done or planned drill holes. So I really encourage people to take the time to review maps and sections. If you find them a bit confusing, stick with it. And bit by bit, you will start to be able to gather more information out of that. And of course, taking a course can also help as well. Maybe one of the next things I would say is about the depth of the drill hole intersection. As most of your listeners will know, there's surface mining and there's underground mining. And so the depth of the drill hole intersection, and that's really where does it start? How far below the surface does that mineralized intersection start? If it starts near surface, so I would say within a few tens of meters of the surface, then you have the opportunity for an open pit mine. And open pit mines are less cost to produce. They are more productive. You can have a lot higher tonnage production, and therefore lower grades. So you can afford to have quite a lower grade intersection for a near surface intersection. If it's deeper, so greater than a few tens of meters, and really going down below 100 meters or more, it's quite likely that that's going to have to be an underground deposit, an underground mine. In which case, you're going to need higher grades. And maybe just as a ballpark in the gold world, I could, just drawing on existing mines. In surface mines, there are existing mines in gold that are less than a gram per ton, even half a gram per ton. For large open pit mines, and their profitability comes from the volume that they're producing, right? They're only getting a little profit per ton, but they're moving a lot of tonnage through that production. Underground gold mines, probably we're looking at 5 grams per ton or more, and they'll have much lower production rates. So I always like to look at existing mines, and that helps me to benchmark what I might be looking for from the exploration side of it. So anything less than a gram near surface, or let me say anything more than a gram near surface, is worth having your eye on. Deeper down than that, anything 5+ grams, certainly worth looking at as well. And I say that while respecting the fact that there's lots of variables for a mine. It's just not grade, as I'm sure many of your listeners know. So, but it's nice to be able to look at grade and get a sense of that as well. Then maybe what I would say is, okay, so you've had a chance now. You understand why they're drilling. You've looked at the intervals and the lengths, the grades, that kind of thing. You know how deep they're drilling. Now you need to say, okay, well, where are they in the sort of exploration cycle? And that means go back, see what they've already done, and more importantly, what's coming up. As we know in the junior sector in particular, promotion is really important. I mean, there's a lot of junior companies out there, and they need to be able to get their story out there and talk about it. And the best way of doing that is with news flow. So if I look forward and I say, wow, those are some pretty good results, but it's the very last release from a drill program. There's not another program starting for, who knows, maybe next year or something like that. Okay, well, there's not going to be a lot of news flow, or they're just going to be recycling news. So that makes me think, there's not going to be a lot of interesting new information that would draw in investors. If, however, it's, just midway through a big drill program, there's going to be lots more results coming out. There's going to be news flow. Hopefully some of that news is good. That's something that I like to look at too. just to keep your eye on that. I think it's always worth looking at trends in commodities. I mean, I've talked about just about gold, but of course, there's lots of commodities out there. I mean, copper is a very interesting one right now, and we're seeing it being a little bit volatile because of that. Copper for a low carbon future is anticipated to be huge demand. So it runs up and then it pulls back a bit, but it depends on your investment view, right? If you've got a short-term view, well, you could look at commodity cycles in the short term, but if you got a medium-term view, I mean, things like copper are definitely worth looking at because of anticipated strong demand. So seeing the trends in the commodity flow and of course, that's not always so easy, especially with gold. As you know, it's very hard to predict exactly where gold is going, but as an individual investor, you may have a sense of that, or you may have a sense of other commodities. If you like a commodity, follow it. I mean, that's the kind of stuff that you should be doing. And maybe the last thing I would just talk about beyond the real technical geology, geochemistry, those kinds of things, are social and environmental aspects. Those have long been very important in the industry. They're ever increasing in terms of the importance to have, be very sound in your environmental performance and to have good relationships with communities and governments and regions and where you work. So I think that as you're kind of looking at the company or the project as a whole, is to get a sense of that. Are there some red flags when it comes to environmental concerns? Is it in a region that generally supports mining or has had a history of blockades? Everybody's got a different view of that. I mean, I live in British Columbia, and you'll certainly hear people say, "Oh, there's no point in exploring there," whereas other people feel it's the place to go. So, again, every investor will have their view on that. But I do think that social and environmental issues are and continue to be really important, as we've seen with the rise of ESG and investing. So I do think that that's important to do a little bit of assessment on that. And is it a good jurisdiction to work in? And are there any serious environmental, kind of concerns that you'd want about or that you'd be concerned about? And maybe just the last one on this, and this is one that a lot of analysts, certainly you would hear them say, is about the management of the company. So this isn't specific to the drill release itself, but there's a lot of knowledge and experience out there that a good management team really has the ability to find good projects, to fund those projects, and to execute them and build the partnerships to make that a success. And so finding management teams or looking at management teams that are experienced and have done it before, that's great. Now, I wouldn't ignore ones with less experienced or management teams that you don't know. To be honest, I tend to get interested in a project because of the project. Usually I come across a release or something, then I go in and I start saying, okay, well, who's running this company? And maybe I don't know them, and that doesn't immediately shut me down. But if I do know them and I know they've had good experience and success, then that's certainly one that I would follow. And then just the financial state of the company. And where I'd put that from, how much money do they have and can they raise more? Because juniors need cash to explore so that they can drill and they can release results. We're in a pretty good position right now in the market. A lot of money has been raised, so that's great. There's going to be continued news flow coming out. And I'm optimistic that the conditions for raising more money will continue to be good. But if they become very difficult and the company is kind of out of money with this press release on drill results, then they're going to be challenged to raise more, or they may have serious dilution in raising money. And that's something to keep your eye onto as well. So there's kind of some technical things and some more sort of social, environmental, management, financial things you can look at as well. That I suggest investors sort of take a bit of a systematic approach to going through news releases, especially on drilling. So,
thank you for that overview. Are there any tips you can give my audience as they're looking for the next exploration company that could be on the verge of a discovery? Like, what tips should they look for in press releases? Maybe that discovery hole hasn't been announced, but maybe some other information has been given to the market via press release. What should they look out for?
Yeah. Okay. Good question. I mean, that's a really a sweet spot to be in, is to find projects that are hopefully on the cusp of discovery. Arguably, that's what everybody wants to look at. And you will see companies release all sorts of geological information, things like soil sampling. They'll talk about alteration. I was looking at one this morning. It was talking about, they've discovered this caldera, which is a type of volcanic structure that is common to host some types of gold deposits. So all that's great, but it doesn't really, as an investor, tell you all that much. The one that I would always sort of suggest and recommend people have their eye on are trenching results. So companies, when they are doing their surface work, as they're trying to understand the project and really define drill targets, they'll do trenching. So they'll maybe little pits, or they'll actually dig some trenches right down into the bedrock, sample that bedrock, see what the results are, and then that guides their next decision. What I like about it is they're sampling rock. They're not sampling soils or stream sediment. Those are important activities, but they're not the rock that you're going to mine. And what I have seen on several occasions is companies will release trenching results over a pretty good area. So they'll have a whole series of trenches over several hundred meters, or maybe even a bigger area than that. And those trench results are good. And so what I see is the market, okay, you can see the chart, and soil and stream sediments does nothing. Trench results, you get just that little uptick. Investors sort of, okay, they've sampled rock, they've got some good results over a pretty good area. That's meaningful. And then, of course, they're going to start to drill it. Now, from a geological point of view, I sort of say to myself, well, if they've got pretty good trench results over several hundred meters, maybe in a few directions, geologically, it makes sense that mineralization continues down into the ground. I mean, what are the odds to me geologically that it's just a narrow, near surface zone? It's possible, and it definitely has happened. But I would say the odds tip in your favor that if they've got a big area of mineralization on the surface, more often than not, that's going to go down into the ground. They're going to target their drill results or their drill holes around where those good results were found in trenching. And that leads to pretty good odds that the initial drilling will probably be good, because it's essentially following right below those surface results. So again, you see a little uptick in the market when the trench results come out. And then it goes once the drilling comes out, because that's what people are really paying attention to. They want to see those drill results. So, there's something to get your eye into, trenching in particular. I don't want to belittle the other work, geological, soil sampling, etc. All of that's important too, and worth keeping your eye on so that you're sort of prepped and ready to maybe move on some things. But trenching is one that I think is a worthwhile. The results from that are definitely worth paying attention to in advance of then that drilling coming forward.
When it comes to what mineral exploration companies put in their press releases or intentionally leave out what they don't say, what are some red flags that listeners should look for?
Right. Yeah. Good point. That's, comes back to the promotional part. It's good and it's important, but sometimes it can get a little bit overdone and isn't so meaningful. So one of the first ones I would just say, is it new news or is it recycled? Especially when it comes to drilling. I've seen examples where, there's a whole table of drill results showing some really great results. But what you find is it's only the two holes at the bottom that didn't have any results that are actually new. The rest of them have already been released. So it's not incorrect information. It's just that that's already out there and people have already acted on that. So that's a little bit about knowing, as I said, looking back a little bit at where they are to get to now, as well as forward. So have they already released those results? So that's a pretty straightforward one. I think on gold, one of the real challenges with gold is what we refer to as the nugget effect. And what that is from a geological point of view is there's many types of gold deposits in which the gold itself, it's not a nugget like you would see from a placer mine, like a big piece of gold. The term nugget effect in this sense means that the gold tends to be spotty or patchy. It's concentrated in little pieces throughout the rock. It's not evenly distributed. What that means is that when a company drills down through it, if they happen to go through in that, small drill hole, because drill holes aren't very big, they go through a patch of rock that has the gold in it, they make it these incredibly high results. But if they were to drill half a meter over, they might hit almost no gold. And that's the nature of this kind of nuggety effect to the gold. So I would be, really high grade, flashy intersections. They look great, but they may not be very meaningful. So I would caution that and don't sell the house over a super high grade number that's released. The other thing is what they'll do is they had this super high grade intersection that was maybe only 10 centimeters long, and then they had little bits of gold much lower over the next 10 or 15 meters. They'll average it over the whole 15 meters. When you take that super high number and you average it over 15 meters, you still get a good number. And so now they're saying, oh, we've got, this amount of gold over 15 meters. You're going, wow, that's really good. But what actually it really represents is a super high grade number over 10 centimeters or 15 centimeters, followed by maybe sub-economic numbers after that. And so how do you know that? You got to read through what the company says. If they put out tables of their assay results, which a number of companies do, and I think is a really good disclosure, activity, then you can look at them and look at each individual one and see, and I've seen a number of examples on that. So just, I guess if it's gold and they do reference nuggety effects, then that's something to certainly keep your eye on. Last one, maybe I'd just mention, is metal equivalents. So what are metal equivalents? And people will probably see this in a number of times when companies release drill results or maybe a resource estimate, is that if you have a deposit that has multiple commodities, so let's say we've got gold, silver, copper, and zinc. So we got 4 commodities in there. What they'll do is they will convert the grade results of those 4 commodities, and they'll convert it into the equivalent for a single commodity. So they'll say maybe they only had 2 grams per ton gold, but in gold equivalent, when you consider what the silver, copper, and zinc would be, from a dollar point of view, if it was gold, they'll say, well, we actually have 6 grams per ton gold equivalent. Okay, so that's great. And it's a valid thing to do. Companies do it all the time because it really helps to distill it down to a single number. People are much better at understanding single numbers, comparing one to the next. It's hard to do that with multiple numbers. My caution on that is that you may have gold, silver, copper, and zinc, but you're never going to be able to recover all of those metals to the same extent. Most people, when they do metal equivalents, they adjust for that. So they adjust and say, well, we have all this zinc, but we're really only going to be able to recover half of it. So we shouldn't be including all that zinc into the gold equivalent, only half of it, because we're only going to be able to actually recover half of it. So it starts to get a little bit technical, but I caution a little bit on metal equivalents because if they have not been adjusted for variable recoveries that would realistically happen in a mining operation, then they're not as meaningful as they should be. Now, I would say most companies do that. So I think you just want to see a little footnote that usually has some sort of calculation. Metal equivalents were derived from, and they have a little bit of a formula there. Then you can feel okay about that. But I do like metal equivalents. I think they're an easy way to assess things. But keep in mind, it's not a 6 gram per ton gold deposit, right? It's only a 2 gram per ton with these other commodities in it. So there's maybe a couple of things just for people to keep their eye into as they're looking at news releases. So.
That's a great point. What about when you get an exploration company that doesn't just claim they found a deposit, but they claim they found a district, a region? Geologically, we've uncovered this. I've observed this in the oil and gas space as well as the gold space, to where they say, It's not a deposit. It's Witwatersrand 2.0. How do you interpret that? I didn't mention in the introduction, but you have a PhD. You're a professional geologist. You're not just an author. How do you look at it?
Yeah. Well, I mean, I guess there's a couple of things there. People who talk about founding a whole new district, certainly that's possible. I'm going to say globally, we've matured in exploration. Most jurisdictions have been tested to some reasonable degree. There's not that many district scales that are ripe for, discoveries across the whole district. And I caution saying that a little bit because there is still new discoveries, of course, to be made in areas that we haven't been to before. The other thing I would say, if they've discovered a whole new district, is, well, how do they get focused, right? Sometimes that's a trouble. I mean, I've seen projects where they've got so many targets. Well, how do you prioritize? And they end up drilling huge numbers of targets, none of which end up all that great. Sometimes having a lot of targets is worse than only having a small number, because at least you can focus your activities. But the other, comment would be, have they discovered something new that's never been discovered before, some brand new type of deposit, especially in an area people have worked in? I would treat that one with caution. There's enough work in exploration and mining over the years. The likelihood of us discovering brand new, never seen before deposits seem to me unlikely, especially if they're spectacularly high grade. Witwatersrand is in South Africa, just amazing gold mineralization there. Is there another one of those sitting somewhere ripe for the discovery? I would be cautious about that. I think, the old adage, if it seems like it's too good to be true, it probably is. So, innovation is happening. It's not as if we can't make new discoveries and find new things, but I treat them with caution, because there is a good, solid database of science and geology behind mineral deposits, and we really know what most of them are, I would say, with our knowledge today. So.
Excellent. Well, I asked Rob on the show today so you could hear more of the insights and the instruction that he has to offer, because many of you, in fact, I responded to an email today, asked me, Bill, I'm new to this. What book do I buy? The first one you want to buy is Rob's book. He also offers online training courses. There it is. Mineral Exploration and Mining Essentials. I have that. It's here in my office. I'd have to get up from this microphone.
It was reversed on the screen. I'm not sure.
No, we saw it. But okay. He also offers online training courses. I know some people like the training courses in addition to the book. So you can find information at MiningStockEducation.com. And Rob, tell us what you have upcoming. And you said there would be a discount for my listeners.
Yeah. I've got, so I've been delivering, courses for the better part of 20 years around my book on this topic to the investment community and the business community, probably, and the many thousands of people anyway, over the years. And of course, in this new sort of world that we're in now, I've been doing that virtually. And so I have a course coming up at the end of September 28th to 30th. And the format that I'm using, it's going to be online. And the format I'm using is sort of a half day. So it's 3 half days. It's going to run from 12 to 4 Eastern time on Tuesday, Wednesday, and Thursday, the 28th to 30th of September. I've had good feedback on that schedule. People seem to be able to sort of keep themselves engaged for that length of time without making it a full day. And of course, it's accessible, so you don't have to travel anywhere to come to that. So, for your listeners, if they're interested in that, and they can get a link at MiningEssentials.com to the course registration. If you use the code MiningEducation, all is one word, MiningEducation, there's a 15% discount available for that code. And if you forget the code and you're not sure, you can certainly email me, Rob at MiningEssentials.com, and mention Bill, and I can get you that code as well. But Mining Education will give you 15% off. And I've done a whole bunch of these online now with some great feedback. You'll hear stuff like I talked about today, but with lots of good visuals and videos, and I really make it an engaging experience for people. So I look forward to having some of your listeners join.
Excellent. Well, thank you, Rob. And I encourage you to go over there to MiningEssentials.com. This was not a sponsored interview. I brought Rob on the show because you don't want to just be given a fish, given a company name to invest in. You want to learn how to fish and to decipher the good from the bad. And that's where, especially if you're coming from outside the mining industry like me, courses like this and what Rob has to offer are crucial, and they can really propel you along your journey as an investor, a resource investor. So again, Rob, thanks for coming on the show, and I look forward to touching base with you again.
Yeah, perfect. Thanks very much, Bill. I was glad to be here.